All Adani Group's shares are deep in red territory after a US court and the Securities and Exchange Commission charged Gautam Adani along with other executives of bribery and fraud. In a statement, the group says it has decided not to proceed with the proposed dollar-denominated bond offerings.
Banks become collateral damage after Adani Group indictment. The State Bank of India, which has the big exposure to the group, as well as several other banks, are down in trade.
Dr. Reddy's Labs is down over 1% after the US FDA issues 7 observations for API manufacturing facility in Hyderabad.
Switzerland rally continues after the strong up move on Tuesday. The stock is up close to 3%. The management tells CNBC-TV18 that the order book now stands at a record 5.1 gigawatts. They are also in the process of expanding their manufacturing capacity to 4.5 gigawatts by March.
A big CNBC-TV18 news break is confirmed. Adani Infra will acquire up to 30% stake in PSP projects for 685 crore rupees. The stock of PSP projects, however, down nearly 8% in trade today.
Hello and welcome to Chart Busters. Well, the markets are down close to around 180 points. We're off 40 points from the low point of the day. Things are looking a little bit sketchy. The mid-cap index actually is doing a relative outperformance because that's down 0.4%. But the Nifty Bank, that's the one that's been putting in a bit of a fight, and that's down close to around 450 points. Odd Mangalam. Plenty of cues. We already had Mangalam on the domestic as well as on the international front. And then you have this Adani Group news that comes out of nowhere and dense sentiment more than anything. And more than the group, it's hurting the lenders.
Absolutely, Nigel. You know, the way the market is right now, it is poised for any sort of reason for one, sell-off that takes place. That's the kind of sentiment that we're in. So obviously, what the facts of the case are and the actual implications will come by much later. For now, the mood of the street has been a bit of a sell-on rally, and every time there has been a bit of an up move, we've seen a bit of a downtake as well. But in light of that, a couple of stocks doing extremely well. Trent, for instance, is now holding up in the green. Indian Hotels, remember the management had, given their FY30 sort of guidance coming by on Tuesday itself at its analyst day. The stock has moved to a record high on the back of that. And a bunch of other stocks also seeing traction from the lows. Case in point, a couple of these cement names, JK Cement doing extremely well, Ultratech at the high point of trade, and DLF2 from the lows has seen a bit of recovery. But speaking about recovery itself, we did pose the same question to the management or the MD designate of Pidilite Industries, Sudhanshu Vats, at the Global Leadership Summit, who spoke to us about the weak consumer sentiment and the steps that he will take to strengthen the brand after he takes over as the managing director come April.
I think for businesses that operate either in all of India or on the lower end of the curve are feeling a little bit of the pressure. My own sense is that this is temporary, but at this moment, is that pressure there? The answer is yes, because I think real wages may not have kept pace because of food inflation in the near term, which has gone by, and that has put a lot of pressure on demand, in my opinion. We also play for the long haul, so we are the test match players. We also do things which are medium term and long term. We will continue to do things which are right, and because of the portfolio that we built and our ability to play all of India, I think we are confident in the way we will progress ahead. There are 2 or 3 areas where we would like to dial up our agenda. You would see one, continuous focus on digital transformation and automation. We've begun that, but you will see us accelerating that agenda. I think as we prepare for the future, the second important area is how do we look at the entire space of sustainability? How do we make the organization sustainable in the real sense, I think, overall? And finally, continue to dial up innovation and build the portfolio for the future.
All right. Well, let's turn our attention now to the lenders to the auto space. While over-leveraging in microfinance sector has been a concern in the financial sector for now, of late, growth concerns have been emerging from the auto space. And that could, in turn, have an impact on the lenders. To discuss this and more, we have Saswata Gupta, who is the Senior Director of Asia Pacific Banks at Fitch, as well as Anil Gupta, Senior VP at ICRA, who join us on the show. Hi, good morning, gentlemen. Thanks a lot for joining in. Well, Anil, you go first. tell us about, the perceived pain that we're seeing in rural India, and how do you think things are shaping up? Because there's quite a bit of exposure out there.
Yeah, hi, good morning. So yes, definitely from the asset quality perspective of the lenders, there has been some weakening in the asset quality matrices, especially for the lenders who have exposure to the rural India. Microfinance, of course, we know, but even let's say some other loans which are oriented towards rural India, let's say two-wheeler, or let's say used cars, or let's say the loan against property, all these segments have seen some kind of maybe weakening in terms of asset quality indicators for the lenders. And the reason is maybe, or both maybe, what we can say is, one, definitely the impact on the income levels, and second is the over leveraging. While the impact of income is not that significant, let's say a driver for the asset quality, but I think maybe a pockets of over leveraging with some kind of borrowers is definitely a driver which is pulling down the asset quality. So we think that maybe few more quarters of pain can possibly continue till the time these borrowers who are over leveraged don't basically fall off. So maybe third quarter and maybe the fourth quarter can also be weak in terms of asset quality for the sector as a whole.
All right, take your point, Anil. Meanwhile, while you were talking, there was a flash at the bottom of the screen that came in from Moody's, which said that the development with regards to the Adani Group, the indictment of senior officials, may be a bit of a credit negative. Now, from a credit rating standpoint, I just wanted to understand your position on this. I'll come to Shashwat first and then get a view on this from Anil as well. Shashwat, would you have any back of the envelope calculations on the kind of debt that the group has with the lenders and what kind of impact it could have on the creditworthiness because of this development that took place overnight?
Unfortunately, no. I primarily look at the financial space. So for this particular development, you would have to speak with the relevant corporate analyst. Unfortunately, I don't have an opinion on this.
Anil, your thoughts?
Yeah, so again, I will not be able to comment on this specific thing because I will not have these numbers, but definitely the management profile, management quality is one of the drivers for the rating, right? So any negative development does have that impact. So not specific to this case, but in general, that is how it is perceived.
All right, no problem. Let's get going then with regards to the future of the auto lenders. Do you think because of this over leveraging and because of this sentiment weakness that we're seeing, could there be some downgrades due to deterioration in some of the fundamentals of auto lenders? Shashwat, go ahead.
Yeah, I mean, among the mix of things, I think while there has been pressure on the auto lenders for a while, in the waterfall of potential concerns, I don't think it's really right up there at the moment in our sort of minds. What actually occupies a lot more within that space is, of course, one you've talked about, which is microfinance, and I won't sort of repeat what has already been said. But at the same time, what is also, I think, I think a source of concern, or could be a source of concern in times to come, is essentially the unsecured retail loan space, including both credit cards and personal loans. And I think that to us perhaps is at the moment, at least if one has to take a view over the next 12 to 15 months, is potentially a bigger concern from our standpoint, primarily because these are largely unsecured in nature. For auto, for whatever it's worth, I think the loans are still by and large secured. And so you would have some degree of some kind of a recovery rate on those loans in the hypothetical scenario some were to go bad, whereas that is not the case for these unsecured loans. So I think in the near term, I think that's probably a bigger concern.
Well, and Shashwat, most of these auto lenders, they're more or less well capitalized, right? I think Mahindra Financial, I think they're on the verge of that. If there is a further deterioration in the books, do you think that they will be at risk, or do you think they've got plenty of cushion?
Well, I mean, our sense is that if you're talking about the marquee ones, I think they should be okay. It's not that they're new to stress. I think the kind of I mean, you mentioned MMFSL. I mean, they are primarily operating in the rural space, and cyclicality is not unique to them. I think they have seen stress in the past, and they have sort of come out of it. So I think also, and of course, they have a large corporate sitting on top of them. So there can be obviously the element of potential support should there be a need. So I think from our perspective, these large ones essentially are. I mean, I wouldn't say. I mean, the situation or the sector per se is going through stress, but do I see them as an imminent balance sheet risk for the banks? The answer is no.
All right, final question. We'll let Anil have a word on this one as well. Anil, your thoughts on what are your expectations, let's put it that way, on the auto sector growth itself? This is with regards to cars, CVs, trucks, etc. And in light of that, freight rates, despite the sort of damage that we've seen in sentiment, they've remained fairly stable. So what's your outlook on that? So freight rates and outlook for growth of various ends of the vehicle sector.
Sure. So maybe the growth in the festive season definitely has helped in terms of some uptick in the sales volume for the automobile companies. But I think maybe sustaining of that demand in the second half, given maybe there can be some sort of maybe a credit squeeze because lenders may pull back in terms of maybe how the asset quality is emerging. So whether that credit flow squeeze maybe has an impact on the sales, I think that is something what we have to watch out for. In terms of freight, I think you absolutely said right. The demand has been holding on. And I think the second half typically tends to be more maybe busier than the first half. So in terms of maybe the outlook on the freight rate, it should continue to hold on in terms of maybe the growth outlook for the second half in terms of GDP also is good. So the freight rates should hold on. So that should have some maybe a breather for the asset quality in the second half. But we have to watch out on the sales given the expectation on credit flow.
All right, gentlemen, thank you so much for joining in and weighing in with your views on this important, growth pangs for the auto sector, so to say, and the impact that it could have on some of the lenders as well. We'll keep, chiming into your opinion every once in a while where we have any development that takes place in the sector itself. Take a short break, come back. On the other side, we'll focus on the market technicals. Sachidanand Dekar of Trade Bulls joins in. Market continues to reel under pressure. Now the Nifty is down about 200 points. Not much different from what we had seen earlier, but the fact that there has been no recovery is something that we'll keep an eye out on. What actually is selling off further are the Adani Group stocks, and all of them actually are down they've extended their cuts, and our colleague Sudarshan tells us that the overall market cap erosion of the Adani Group now has increased to about 2.6 lakh crores. So we'll keep an eye out on that. Adani End now down 23%, Adani Ports down about 20%, and these are frontline stocks that we're talking about. We also got notes coming in from, Moody's ratings. They've said the indictment of Adani Group's chairman and other senior officials on bribery charges is credit negative for the group companies. Our main focus when assessing Adani Group is on the ability of the group's companies to access capital to meet their liquidity requirements and on its government practices. So they've weighed in with their opinion on that, and as a result of which we've seen further sell-off in these stocks, as you can see on your screens. But speaking about the screen itself, let's take note of the markets. We do have Sachidanand Dekar of Trade Bulls joining in for a quick technical check on the market. Sachi, before I come to you for your call on the market, one has to congratulate you for the call that you took on Indian Hotels. The stock is at a record high right now. This is before the analyst day, announcements that the company had made. So you probably read the charts out there. Similar to that, if you could give us a sense on the market and some other stocks as well.
Thank you, Mangalam. Clearly, I think market is, in a very difficult state. But if you look at some of the stock performances, there are pockets of strength which are still available, especially when you look at the relative strength. So even right now, the way both the indices are placed, Clearly, Nifty Bank is under pressure. It is, managing to sustain above its 200-day exponential moving average support. But if you look at the candlestick formation, it's a falling tree formation, which is not a healthy sign for the index. So probably we may see some pressure when it comes to Nifty Bank. We may see it, scaling lower towards that 49,650, 700 kind of a support. The only revival point for this particular index is in case if we see a very strong swing above that 50,430 mark, which is also the 5-day exponential moving average support. But when we look at the Nifty, the range of for Nifty is again contracting. We have seen 23,250 on the lower side acting as a support, but on the higher side, there needs to be a strong, swing towards 23,740. So once we see a breakout from this particular range, we may see a very strong revival. Also, if you look at the immediate stats, we are observing a positive divergence on the Nifty. So that's why we are avoiding, fresh short positions here. And even right now, the stocks that are looking positive are something like M&M. Wherein if you look at the last 4 trading sessions, the relative strength has been very strong. The stock has been sustaining above its 5 and 20 exponential moving averages despite of the market volatility. And there's a good positive crossover on the averages, which is indicating a strong momentum flow. So we're expecting that this particular rally, at least for the day, may stretch towards 3020. Eventually, the target is placed somewhere close to around 3100. We are recommending building long positions in M&M, keeping a stop loss at 2910 on a closing basis. The other strength is witnessed in some of the pharma packs, and within that, Divi's Lab has broken out from a triangle formation. Even here, the relative strength has been better. It has been forming a strong base somewhere close to around 5,900. The base now looks elevated, so we are expecting that this particular mood of momentum may continue towards 6030. The eventual target is placed at 6,070, and that's why we are recommending building fresh long positions here with a stop loss at 5,920.
Okay, all right, Sachin, thanks a lot for that. By the way, as we are tracking the markets, a few stocks actually have recovered from the day's low. Ambuja Cements is still down 12%, but it's come off 4% from the day's low, so that's good. ACC as well has come off close to around 4% from the low point of the day. And REC as well as PFC, they're seeing some kind of recovery in the last few minutes. So that's pretty good news as well. Pull up both those two stocks. And the one that we've been tracking for the last month or so, telling you about the alumina shortage that's there in the system, is Nalco. So that one has perked up, and also aluminium prices have gone to multi-month highs. So that's why Nalco is now gunning away up at the high point of the day. Well, let's turn our attention to our special segment where we get you a few ideas for profit from Money Control Pro. Madhu joins us to help us out with the stock that she's tracking. Madhu?
We are talking about VIP Industries that has had a difficult going since the start of FY24, and the weakness continued in the latest reported quarter as well. While the revenue growth primarily was flat, the underlying volume growth was a healthy 18% year-on-year, and this aided the company in liquidating a part of its slow-moving inventory. But this came at the cost of realization, leading to a wide gap between the volume and the value growth. VIP nevertheless managed to improve its market share, and the management alluded to market share gains in the latest quarter as well. The adverse product mix, channel mix, and inventory liquidation weighed on the gross margin, and the operating margin was further impacted by high warehousing costs due to holding of inventory. The company nevertheless is guiding to a much better future. It expects to liquidate a large part of the inventory in the coming Q3, which is also a seasonally strong quarter marked by holidays and weddings. It is expecting a more normal fourth quarter. The industry tailwinds remain strong. While VIP's turnaround is still a work in progress, investors with high risk appetite and long-term investment horizon can start looking at the stock.
Okay, all right. Thanks a lot for that, Madhu. In fact, the hope is that there maybe could be a change of hands at the promoter entity. And hopefully the company will have a better showing in the second half of the year in comparison to the first half of the year. VIP Industries is the one that we're talking about. For the time being, we'll slip into a short break. On the other side, we'll continue to focus on markets and stock-specific action.
Welcome back. As you can see at the top of our screens, all indices are in the red, but nothing really to worry despite the big cuts that we're seeing is because there has been some recovery. The Nifty bank is up around 300 points from the lows. The Nifty itself is up around 60, 65 points off the low. So we'll keep tracking the market moves as we go along, alongside all the cues that we have. With that, we're out of time on this edition of Chartbusters. Thank you so much for watching. Trading Hour comes up next.